With the Super Bowl done and the Fed meeting looming overhead, today is a day of very highly likely high volatility with a major range resolution to prepare for. With that said, welcome back to EllioTrades channel. Today I'm your host, Krown, and we will be going over the very critical, the very imminent, the very specific, and more importantly tangible areas to be defining on price action that would essentially imply a range resolution. Now, there is a big event today, and that event is going to be the Fed meeting. Also, there's the whole Russia-Ukraine situation, which who knows what the hell goes on over there. But more importantly, on a day like today, when there is a Fed meeting, I want to really differentiate the way that I'm going to explain the content on this channel compared to a lot of the other explanations that I see out there. Look, on a day like today, unless you are an insider, there really is no major edge, as unfortunately, there is no way to know what the actual Fed is going to do. Now, what I can relate from my experience when dealing with these situations is that it actually does not necessarily matter the actual thing that they're going to do, the Fed that is. It matters what the expectation is versus the reality. So how can I explain this? Well, actually rather simply, the Fed is expected to have essentially an emergency meeting. It's like they're copying the like YouTubers now. The YouTubers title is like emergency, critical, urgent warning on the interest rates. Anyways, the Fed is going to have their meeting today. It was kind of an unplanned one, but it's a bit of an emergency apparently to deal with the old inflation, right? After having some of the highest reads I think ever or something like that. Anyways, the expectation is going to price in, as you've been seeing, the worst case scenario, which is there's going to be not just a rate hike for interest rates, but it's going to come sooner than what we initially thought, and maybe there'll even be more over time as well. Perhaps even the Fed will start to reduce the balance sheet earlier as well too. So if the Fed comes out today and they come out with basically anything that is less than that, you very likely will see markets rally. And if they actually clear above some specific areas that we're going to talk about soon here, I would be calling that a major breakout with targets up towards, maybe even $50,000 plus over time. Now, naturally, will take time. By the same token, to the downside, if it is even worse than the expectations, then, we're probably talking about another move back down to the mid $30,000 territory. So with that said, I want to tangibly define these regions, how you'll know as an average person, as am I, and then, well, let the chips fall where they may. So with that in mind, I should also let you know if you're interested in a daily Bitcoin analysis, if you think that might be valuable to your life, well, I do exactly that on my own channel at Eric Krown Crypto. There is a link in the description below, and let's get into it right now. So let's start off on over here, and I want to follow up first on the last, I think it was like 2.5 to 3 weeks of these videos that we've been doing on this channel. And essentially what was this? We were saying, based off of some of the underlying market dynamics, it was best to be cautious, pretty much ever since Bitcoin broke $63,500 to the downside. There were a couple times over here in early January where we also said, hey, this could be a bit of a bottoming area. That did not work out, obviously. The cautious route did presume, essentially. And then we said, hey, $35,000, very likely a big bounce area. That's what we've gotten thus far. First target was the 0.382 Fibonacci bearish retracement right here at $41,000 based off of the bear trap that we identified and then validated. I think it was like a week and a half or 2 weeks ago now. And then the second target was $45,000, both of which we have hit beautifully. So that is excellent. I'm not saying these things to toot my own horn. I'm saying them so that you can follow up with them over time, see how they act, and then you can, do it yourself, which is the ultimate goal, I imagine. I mean, you don't want to be relying on me. Like, what if I'm not there? And also, what if I'm wrong? Plenty of reasons not to do that. Anyways, in this case, we did say that a pullback from the $45,000 region was very likely, with targets specifically down to 41,500, and we've actually gotten that. Or no, we haven't. Krown's wrong. The low of the day is 41,516. So hang him and burn him and tar and feather him, or whatever other terrible medieval punishments you can think of which I just saw the new trailer for The Lord of the Rings, and it's amazing, and I'm really excited for that. Anyways, on topic again, perhaps. So what we're looking at right here is again the same range resolutions. Bitcoin closing a daily below 40,400 or above $45,000, or even a full hour above $45,000, would constitute a range resolution, thus initiating major continuation. In the case of the upside, I would be looking at targets somewhere around the 618 Fibonacci retracement here at about $50,000. Also, our last, I should probably put this in as well. Also, one of our last major highs along the way to the downside, and also in line with the 200 simple right here on the daily. I'll actually explain in a little bit why I do think that indicators are planting a more likely bullish scenario here, but again, indicators kind of go out the window when we have scenarios like today. By the same token, to the downside, I actually do think that the downside is a bit limited, even if Bitcoin does close below 40,400. I actually don't think that Bitcoin would go, much further than, like, let's say around $35,000. There's a very specific reason for that. The same thing that was keeping us cautious on the way down throughout these last about, 80, 90 days or so, is actually painting a picture that says, the downside is like, where are we going to find it from right now? And it's this, the global open interest. Again, you can get this data for free on my own application at app.crowntrading, Krown with K.net. And the open interest on that last high that Bitcoin put in, again, representing leveraged positions, which is like rocket fuel for, forcing price action in a direction, did not really get to a critical region. Throughout the whole move to the downside, we saw, spike up to critical regions, namely above about 13 to 13.5 billion, before major continuation drives to the downside of, 20% or more. I mean, for example, on our all-time high, we also saw the all-time high on open interest at about 16.5 billion. Basically getting unraveled here. Well, in that last high that we did see at $45,000, it did get up to about just over 12 billion. That's not really a critical thing. And I do believe that if we did see the downside initiate, we'd very likely see open interest come back somewhere to about 9 to 9.5 billion, that is, and very likely bounce from there. And that probably correlates to a similar low as to what we already have on price action, somewhere around 35-ish, let's call it, maybe 36, something like that. That would be relevant. So in that case, I do think that if you are super bearish, there are reasons to certainly be. However, I do think that it would probably look something a little bit more like this if it were to end up being like super bearish from like our current area, where you first come down there, put in a low, then you put in a bounce, maybe somewhere around $40,000 again, and then dump it to hell. Do I think that that's the most likely thing to happen? I mean, you don't need my opinion on that, is what I mean to say. It's, again, we'll take it one step at a time. I want to really be more reasonable on a channel like this. Because, well, it's just like, why not, man? Anyways, okay, so I do think that there are a few things that do suggest that Bitcoin has, from an indicator perspective, a more likelihood to try the upside than the downside. Namely, comes down to our momentum oscillators and volatility indicators. We do have potential regular bullish divergence being printed on the full hour RSI here. In fact, it looks like we already do. That, alongside very low volatility, which is a mean reverting indicator, must expand, and volatility plus momentum, well, traditionally speaking, will produce a nice upside move. I also have my Joule light indicator to represent this. Now, this has not been confirmed just yet on this tick. I need to see it close with this light blue color. If that happens, yeah, I'd be looking for at least a short-term move for the upside, somewhere around 44. At that point, obviously, you're closer to the upper side of that range resolution. To add on to that, we have this chart over here. And this chart over here combines three separate indicators. I'll call this the chart of the day, if you will. And these three indicators, when combined, have produced some pretty lovely historical signals. Now, we'll start off with the most important of these three, which is the MACD, the 3-day MACD specifically. And just blindly looking at these crosses to the upside has produced some, pretty amazing moves, actually. And just for reference, you will notice that the 3-day MACD is in the same area that we did see on the July lows at $30,000 before that beautiful bear trap to basically our current all-time highs. But just blindly playing these crosses have been, well, dare I say, profitable. Looking at the early October one at about 40,000 to 45,000 bucks right here, did produce that next move all the way up to about $69,000. Not bad. The time before that was, again, the summer bear trap right here, before going from 30,000 to 53 on that unabated run. The time before that was over here in February of last year, before going from about 35 to basically the all-time highs at 65 after that. And then the time before that, and I won't bore you too much with this, was over here in early October of 2020, actually, before going from about 10,000, 11,000 to 20,000 and beyond. Taking this one step further, we will look at the white moving average on the chart here. Just this white, and it is a 20 simple moving average, and just Bitcoin reclaiming that alongside having a 3-day MACD cross the upside has added further confluence onto those signals and strengthened them for a higher hit rate. So I'm gonna go through the full back testing on this, but basically Bitcoin first getting the 3-day MACD cross the upside plus reclaiming the white 20 simple. These moves have been a higher hit rate, generally speaking, because there are a few in about 3 years ago where you did not have both of those, and the results were not as good with just a 3-day MACD, for example. But I'll let you back test that one on your own. And then the next one is the PMAR right here, which is just a very simple indicator, actually, which measures the distance that price action is away from my moving average, which is a 20 VWMA. Anyways, why is this relevant? What do you need to know about it? Well, you don't need to know about the inner workings of it because it's probably going to bore you, but what you do need to know is the results because it's quite simple, which is denoted by all of these green vertical lines right here. And basically, when we see the PMAR regain and reclaim that moving average on it, plus the 3-day MACD cross the upside, plus the white 20 simple being reclaimed on price action, these have been the results, and you can kind of eyeball them out for yourself right now. And they do have pretty good hit rate, dare I say, or at least that would be my opinion on it. Of course, this is for you to decide for yourself as well. Make sure this video ain't too long just yet, so I think this is good. And what do we see right here? Just testing a few of them out. This was about a 50% move from signal given to next major high. This one over here, again, signal given to next major high, 80% move, not bad. This one over here, from signal given to next major high, about 36%. This one over here to next major high, about 70%. This one over here to next major high, about, well, a lot. This one over here to next major high, 70% again, which is still a lot. This one over here will really start it from reclaiming the 20 simple, but basically another 50% move before the next major consolidation. This one over here from low to high, 55 to 60% move. This one, however, did fail. This is back in October 2019. So of the 1, 2, 3, 4, 5, so 7, 8, 9 signals that we've seen in the past 3 years. One of them was a complete and utter failure, which would have led to very nasty losses. But anyways, we are seeing this signal once again kind of populate itself. Here's your MACD cross. Here's your PMAR. And obviously, price action is right around the 20 simple actually to get one closure above. So I would say that, if you're just going off indicators, a little bit of a higher probability of upside continuation overall. Problem is, with an event like that looming later tonight, that is going to take precedence over anything else. And do understand that if the downside is validated, well, I'm looking down. And I imagine there's not really too much else to it. Anyways, I was going to do a quick chart on the Bitcoin dominance. Maybe I'll save that for another day, but basically I just wanted to follow up on this because we made a video on it like a week ago with salt season. Salt season very likely continuing over the next couple months. Very likely going to take some time. Also on that topic of time, you can see over here on this chart, or maybe you can't, but from these signals given to like the next major high, it has taken on average like a month or two, let's say. Anyways, going back to this chart, representing Bitcoin versus altcoin Bitcoin pairings, I do think they're going to get cream pied, and it ain't going to be very nice for the majority of them. That is to differentiate that statement from what's it called? Sorry about the noises outside. I'm in Dubai right now, and people are showing off their damn cars. Nice one, man. Great job, bro. You did it. I respect you now. Anyways, do you think that this one moves much further up over the next few months here? We have bullish evidence on monthly RSI, 3 drives of bullish evidence on weekly RSI. Volatility is low. Momentum is pointed northwards now. I'm looking for that expansion of volatility alongside upside continuation. And there's going to be, bounce along the way. But here's the thing. What I really think we're going to see is I think we're going to see the bifurcation of this market between quality and not quality. Quality being the ones that, the charts that you typically see go up up and to the right over time, versus not quality ones, which is the ones that you see going down and to the right over time. And when I say over time, I mean, on their like long-term macro charts here. So for example, let's give it a good example and then a bad example so that you can be aware yourself. Here's Ethereum Bitcoin pairing. Now, while I do think that this one probably has some downside in the short term, that is not relevant to the macro here. Macro, we do see, generally speaking, goes up and to the right. You can kind of just draw a line like that, right? Compare that with, where's my favorite one? Here we go. And again, hopefully I do not incite the hate, the hate of the internet, but this one generally goes down and to the right. And again, this one does pump and dump as well. So I'm not saying that you're not going to ever see an upside move in it ever again. It's just they typically don't get sustained. And over a long enough period of time, this one's trending towards 0 versus Bitcoin. Ethereum's trending up and to the right versus Bitcoin on a long enough time period. Again, very, very long here. Anyways, that's going to do it for me. I want to wish you well. Again, please do understand that this is going to be an event-driven situation here. So in my current stance, well, obviously I'm on vacation in Dubai, so like I'm not going to be actively trading this one anyways. But if I was at my battle station, what I would be doing is I'd be waiting for the obvious signal, not trying to guess before then, and then perhaps taking a trade with conviction if it presents itself. If it doesn't, not interested. If it does, great. I'm very happy about that. Anyways, that's going to do it for today. Stay safe, and I wish you well. Take care.